Are you seeing signs of inflation beginning to increase?
We're seeing very substantial inflation. It's very interesting. We're raising prices. People are raising prices to us. It's being accepted. I mean, it's not, take home building. I mean, the cost of, we've got 9 home builders in addition to our manufactured housing thing and operation, which is the largest in the country. So we really do a lot of housing. The costs are just up. Steel costs just every day. They're going up. And there hasn't yet been, because the wage stuff follows. I mean, if the UAW writes a 3-year contract, we got a 3-year contract. But if you're buying steel at General Motors or someplace, you're paying more every day. So it's an economy really, it's red hot. I mean, and we weren't expecting it. I mean, all our companies, when they thought when we're allowed to go back to work, at our various operations, we closed the furniture stores. I mentioned, they were closed for 6 weeks or so on average, and they didn't know what was going to happen when they opened. And they can't stop people from buying things, and we can't deliver them. And they say, well, that's okay because nobody else can deliver them either, and we'll wait for 3 months or something. The backlog grows, and then we thought it would end when the $600 payments ended, and I think around August of last year. It just kept going, and it keeps going, and it keeps going, and it keeps going. And I get the figures every week. I call, or Bumpkin calls me, and we go over day by day what happened at 3 different stores in Chicago and Kansas City and Dallas, and it just won't stop. People have money in their pocket, and they pay higher prices. And when carpet prices go up in a month or two, we announced a price increase for our costs are going up. Supply chains is all screwed up, for all kinds of people. But it's almost a buying frenzy, except certain areas you can't buy yet. You really can't buy international air travel, and so the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in their pocket except for. Meanwhile, it's a terrible situation for a percentage of the people. This suit, I haven't worn a suit, for a year practically, and that means that the dry cleaner nurse just went out of business. I mean, and nobody's bringing in suits to get dry cleaned, and nobody's bringing in white shirts. The place where my wife goes, the small business person, if you didn't have takeout and delivery services for restaurants, you got killed. On the other hand, if you've got takeout facilities, you've done same source sales of Dairy Queen are up a whole lot, and they adapted. But it is not a price-sensitive economy right now in the least. And I don't know exactly how when it shows up in different price indices, but there's more inflation going on quite a bit more inflation going on than people would have anticipated just 6 months ago or thereabouts.
Yeah, and there's one very intelligent man who thinks it's dangerous, and that's just the start.
Inflation is going to affect you. It's certain we will have inflation over time. And we are following policies in this country now to stimulate things, which stimulate business, which are bound to have some inflationary consequences. And to the extent that we borrow money from the rest of the world, it would be very human on the part of politicians in the future decide that they would rather pay the rest of the world back in dollars that are worth far less than the dollars they borrowed. I mean, it's the classic way of reducing the impact and cost of external debt, and we're building up a lot of external debt. I always find it interesting when politicians now talk about using the taxpayers' money to do this and the taxpayers' money to do that, and how the taxpayers are paying the bonuses at AIG. We haven't raised taxes at all in this country. Taxpayers are paying nothing beyond what they were paying a couple years ago. As a matter of fact, the federal revenues this year, which were close to $2.6 trillion a couple years ago, maybe more like $2.3 trillion. So we are taking less money from the taxpayers. The people who are really paying for the things we're doing now will probably be the people who are buying fixed dollar investments, much of it from the U.S. government, and who will find the purchasing power when they go to redeem those investments to be far less. So you might say that the AIG bonus is probably the Chinese are the people that are ultimately paying the most in terms of the loss of purchasing power they will have with their holdings of government bonds. U.S. government bonds many years down the road, but it sounds better to say the taxpayer than to say the Chinese are paying for it. It's an interesting situation. I read that comment every day about how the taxpayers are doing this and that. I haven't had my taxes raised. You haven't had your taxes raised. They're giving me $250 back here pretty soon. Yet taxpayers haven't paid anything so far. And my guess is that the ultimate price of much of this will be paid by a shrinkage in the real value of fixed dollar investments down the road. And that will be the easiest thing to do. And if it's the easiest thing to do, it's the most likely thing to have happen. So you will see plenty of inflation. Now, the best protection against inflation is your own earning power. If you're the best teacher, if you're the best surgeon, if you're the best lawyer, whatever it may be, you will command a given part of other people's production of goods and services, no matter what the currency is, whether it's seashells or Reichsmarks or dollars. So your own earning power is the best by far. If you're the best journalist, whatever it may be, you will get your share of the national economic pie, regardless of the value of whatever the currency may be as measured against some earlier standard. The second best protection is a wonderful business. If you own the Coca-Cola trademark company, you will get a given portion of people's labor 20 years from now and 50 years from now for your product, and it doesn't make any difference what's happened to the price level generally, because people will give up 3 minutes of labor, 5, whatever it may be, to enjoy, 12 ounces of a product they like. So those are the great assets: your own earning power first, and then the earning power of a wonderful business that does not require heavy capital investment. If it requires heavy capital investment, you get killed in inflation. And with those guidelines, I would tell you the best thing to do is invest in yourself.
Yes, the young man should become a brain surgeon and invest in Coca-Cola instead of government bonds.
If you discount it back, and you're discounting at present interest rates, stocks are very, very cheap. Now, the question is what interest rates do over time. But there's a view of what interest rates will be based in the yield curve out to 30 years and, so on. It's a fascinating time. We've never really seen what shoveling money in on the basis that we're doing it on a fiscal basis while following a monetary policy of something close to zero interest rates. And it is enormously pleasant. But in economics, there's one thing always to remember. You can never do one thing. You always have to say, and then what? And we are sending out huge sums. I mean, the president said it on Wednesday, 85% of the people, we're going to get a $1,400 check, 85%. And a couple of years ago, we were saying 40% of the people never could come up with $400 of cash. So we've got 85% of the people getting those sums. And so far, we've had no unpleasant consequences from it. I mean, people feel better. The people who get the money feel better. And people who are lending money don't feel very good. But it causes stocks to go up. It causes business to flourish. It causes an electorate to be happy. And we'll see if it causes anything else. And if it doesn't cause anything else, you can count on it continuing in a very big way. But there are consequences to everything in economics. But that is why the Googles and the Apples, and we don't own Google, we don't own Microsoft, but they are incredible companies in terms of what they earn on capital. They don't require a lot of capital, and they gush out more money. And if you're trying to find bonds that gush out more money from the federal government, we got $100 billion that's gushing out, like, $30 or $40 million a year, or whatever it may be, depending on the short-term rates. So that puts the pressure on, which is exactly, of course, what the monetary authorities want done. I mean, they're pushing the economy and they're doing it in Europe, even more extreme. And they're pushing, and we're aiding it with fiscal policy, and people feel good, and people have become numb to numbers. Trillions don't mean anything to anybody. And $1,400 does mean something to them. So we'll see where it all leads. But Charlie and I consider it the most interesting movie by far we've ever seen in terms of economics, don't we, Charlie?
Yes, and the professional economists, of course, have been very surprised by what's happened. It reminds me of what Churchill said about Clement Attlee. He said he was a very modest man and had a great deal to be modest about. And that's exactly what's happened with the professional economists. They were so confident about everything. And it turns out the world is more complicated than they thought.
Keynes said it many years ago that it's an invisible tax that only one man in a million really understands. And it's a tax on people that have had faith in their currency that the government's issued. The best protection, the best investment against inflation is to improve your own earning power, your own talents. Very few people maximize their talents. And if you increase your talents, they can't tax it while you're doing it. They can't take it away from you. So if you become more useful in your activities, your profession, doctor, lawyer, whatever it may be, that is the best protection against a currency that might decline at a rapid rate. And the best investment, passive investment, I think is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency. But it's interesting. In the United States, the value of the dollar since I was born has declined by 94% to 6 cents. So inflation is a very cruel tax on people who believe in fixed dollars, but things can work out pretty well even during inflationary times. I mean, if somebody told me when I was born, that the dollar bill is going to go to 6 cents, I might have said, let me go back. I'm not interested in emerging into that kind of a world, but actually it's worked out pretty well. So I have no complaints.